Crypto is going up today, and Fetch.AI is just another cryptocurrency among many that are appreciating. But interestingly enough, there is more attention. This is the most viewed cryptocurrencies on CoinGecko today. The market cap isn't necessarily the largest, and the appreciation is just average, yet people are specifically looking at Fetch.AI. We are currently at 35 cents. A while back, there had been a merger between SingularityNet and Fetch.AI with a new rebranding, Artificial Superintelligence Alliance. And there's no real catalyst for the rally, as in we got the resolution of a dispute with Ocean Protocol that sold 120 million worth of the token. But besides that, it's just momentum. It's just a technical breakout. Let's have a look at the technicals. This is Fetch.AI in US dollars on a linear scale. Here is the same on a logarithmic scale. So now we get a better view regarding the percent gains over time. So that's the idea of logarithmic charts, right? Vertical distances equal to the same kinds of percent changes. Very different to a linear scale, where the differences are just US dollar changes, which we aren't that interested in, right? We want to make percent gains. But we can clearly see that over time, the FET token didn't perform that well, especially since AI in general, especially in the stock market, is just climbing from one high to the next. This here is Nvidia stock. But let's compare Fetch.AI with Bitcoin. That's this chart over here. We have bounced off a support that historically showed very depressed prices, and interestingly enough, over time we tend to have higher highs. So I don't have higher highs and higher lows. We have our consistent lows, but we do have higher highs over time. This would of course imply massive outperformance in the future, more than 2000%. Is that realistic at a market cap of 1 billion? Probably not. So this pattern will break at some point. A better comparison is probably Fetch.AI to the others market cap. So this now compares Fetch.AI to all the other altcoins that are not in the top 10. At the bottom, we have again a quite nice support. The dotted line is the average ratio over time. Initially, we had a massive sell-off. Fetch.AI underperformed the rest of the altcoin market by 98%. But since then, we are trading in a somewhat predictable range. And the upside, just to the equilibrium price, would be another 150% roughly, which would bring the price close to 89 cents. Of course, under the assumption that the general altcoin market isn't moving much going forward. Now, what was the reason for this massive sell-off? It seems to have been over the counter dealings of future token emissions, because Fetch.AI started with very little supply. Only 94 million tokens, and that has grown to over 2 billion tokens now. This year, by the way, was the merger. After the multiple X in token supply, we now see a much more muted token inflation. So much less long-term selling pressure, and that can stabilize the price. That's what's keeping the trading range. And so there is a difference between the price development long-term and the market cap development long-term. The price didn't move much. We had the same levels compared to 6 years ago. But since the market cap is increasing because of the increasing token supply, there might still be quite a bit of upside. Let's have a look at the on-chain metrics. There are two versions of the token, one on Ethereum with 157,000 holders roughly, and another one on the Binance Smart Chain with 47,000 holders roughly. What we see here on this screen, that's the Ethereum data. As in, on the left side, we see the number of wallets with at least 2,500 FET tokens. So at the current price, that's roughly $1,000 worth of the token. In the middle, it's equal to $10,000. On the right, it's equal to 100,000 tokens. So we go from retail to medium-sized retail to the whales on Ethereum. There are almost 400 whales on the Ethereum chain, while 14,000 retail investors. Now, isn't it interesting how less than 10% of the entire holder base has more than $1,000 worth of the token? What I also find interesting is that since the beginning of the year, the holder base isn't growing anymore. Let's have a look at the Binance Smart Chain data. Here it is. There are way less whales over here. So only 5% of the whales are on the Binance Smart Chain. But there are comparatively more retail investors here. Again, 2,000 versus 14,000. So that's roughly 1/7 the number of holders. Now, for most cryptocurrencies, there are two major markets. There's a spot market. So that's what we just looked at. That's split between centralized exchanges and decentralized exchanges. Most of the spot trading volume happens on Binance, 259 million worth of trading. And here are the perpetual futures where we've got more trading. So this is the levered bets on the artificial super alliance price. Most perpetual futures traders are currently betting on falling prices. So it costs money, as in the shorts have to pay the longs in order to bet on falling prices. This is not usual. Most of the time we tend to see a positive funding rate. It costs money to bet on rising prices. Not so right now. For the FET token, most perp traders are currently bearish. The open interest hasn't yet grown, and there is positive correlation between price and open interest. Open interest is just the amount of bets on Fetch.AI. So this would again imply that there is more upside potential. When there is more leverage in the token can go up. And again, the trading range would imply a growth of roughly 150% from here. Trading volume also is not yet particularly high, and there is some correlation between trading volume and price as well. And of course, with the rally, we have seen some short liquidations. This year on the 10th of October was the major liquidation event where we saw a flash crash across the entire market. This time, it's not the longs that get liquidated. This time, it's the shorts that feel the pain. So yes, I do believe there's a case to be made that artificial superintelligence alliance can double from here. Not on the back of the spot market, but on the back of perpetual futures. Because if enough people are betting on falling prices, that will also incentivize the market makers to buy up more of the supply. Right? Retail is betting on falling prices, the market makers bet on rising prices, and then they buy up the supply on the spot market to push out all of that short interest. If it's your first time here, feel free to subscribe. I publish videos regularly on various altcoins. Feel free to also give this video a like. It will help the channel grow. Feel free to also check out the premium membership. So that should now pop up on the screen on the right. That leaves you to thebitcointrader.com. This is where I share my own trades. See you either in premium or next time on YouTube. Bye-bye.